Time for another stock review. This is being made during a live show for our members. We're here to serve the members. That's our priority. And today we're looking at Blackrock, ticker symbol BLK. I'm going to give you a full review of this. If you are a member and you do a minimum of $5, you can get a full review of this. We're going to look at the intrinsic value, the balance sheet, the numbers, who's buying, who's selling. We're going to give you access to premium software that you have to pay hundreds of bucks for free. We're going to give you ratings. We're going to give you the latest news. I'm going to run it through my back test. I'm going to look at the dividends. All of this is coming up in this review. The purpose of this review is to give you an informed information so you can decide whether this stock is right for you. So you can look over the numbers and hopefully turn on the money printer and stack up the money. That's what we hope. But so we're going to give you the information so you can make an informed decision. Remember, I do not pump or dump any stock. I only own the S&P. So you know my news and my views are completely impartial. It is backed up by relationships on Instagram and X. I speak to CEOs, hedge fund managers, floor managers at Wall Street. If you want to see all my information before I post it, there is my X and Instagram in the live chat. We're also going to use some exclusive software, which if you want access to, and the only way you can get the discounts is through my referral or anyone's referral. So you might as well use mine as you're here. In the chat, there's Seeking Alpha and Alpha Spread. It's also below in the description and pinned to the comments when this video comes out. We got free trials, we got discounts, huge discounts at the moment running for Black Friday and Cyber Monday. Without my referral, you don't get the discounts and you don't get the trials. So go and check all that out. So without further ado, let's start with Blackrock. What is Blackrock? We're going to start off nice and simple and we're going to get more in depth as we go. If you like this information, consider becoming a member and you can have your very own video. This will rank probably #1 on YouTube. Most of my videos do. And some of my videos also now make it onto Google at the top of the Google list as well. So you might find that interesting. So tap the like button and consider subscribing if you'd like to be part of the family. All right, okay, without further ado then, let's make a start. So Blackrock, we're going to start nice and simple. What is Blackrock? I know it sounds obvious, but we need a full review. Blackrock engages in the provision of investment advisory and risk management solutions. Its products include single asset and multi-asset portfolios. Remember, I love the S&P and Blackrock own the S&P essentially as well. They own everything. So let's see how it compares to the S&P in a moment. The company was founded by Laurence Douglas Fink in 1988 and is headquartered in New York. The listed name is BLK Blackrock. Okay. Laurence Douglas Fink. Love to have Laurence on the show. If you'd like Laurence on the show, we never cold call or go after our CEOs. Our CEOs come to us. How that works is you as investors email investor relations on the company website. Tell them you're an investor and you'd like to hear from the CEO live on the show. Unscripted, unbiased, open discussion. They like to do that. And they've told me they prefer doing it than Bloomberg. They've said to me they enjoy doing it. We've had many and we'll have many more in the future. So if you'd like that, get to work. You could actually build a custom email, send it out to them, a custom email and send out to all the stocks that you own. And once you've got a relationship, then put them in touch with me and then we can get them on the show. All right, okay, let's have a look at this. Now, the volume today, as you can see, is 2,000, no volume at all. People just buy and hold this, a bit like Berkshire Hathaway, I guess. Average volume, what does that mean? Low volume, it's not a trading stock, it's an owning stock. You own this stock for the dividend, you own it for the growth, you own it for security. This is big boy pants money now. This isn't some binky bonk crypto coin. This is real investing. People who buy this own it and just trim as they go. That's what this is all about. Okay, today's high 1,000, today's low 1,019. You can see there, look, market cap 158 million. Now, price to earnings ratio is 25 times. Is that expensive? Well, we're going to come on to much more details very, very shortly. We do have some very good news as well. Some fundamental news just happened. Morningstar say it's 80% buy this stock. However, we don't go off Morningstar. They're paid to say these things. I'm not. The bulls are saying BlackRock's well-diversified product mix makes it fairly agnostic to shifts among asset class and investments. The bears are saying while actively managed funds account for 25% of total AUM, they generate 43% of base management fees. So there's a point there about the cost of owning this. If we look at the what am I looking for? There's a number I was looking for then. I've forgotten the name of it now. It's just gone off my head. Let me just check a moment. There's a fee I'm looking for. The expense ratio. No, it's not an ETF, so it won't have an expense ratio. Okay, but there'll be funds built into the stock. I'm just looking down there. No, that's right. I was thinking of it as an S&P, but of course it's not an ETF, is it? Right, let's scroll down and look at more of the buying action. Now, Robinhood retail investors, not interested. Such slow volume. I don't care what they do. I care what institutions do with BlackRock. They're the ones that move it. I know I'm a retail investor myself on Robinhood, but I can't move BlackRock, so why would I be bothered what anybody else is doing? Hedge fund managers, however, I have friends in this field, and I do care what they're doing. So our hedge funds, they were dumping it back in Q1 of 24, but now increasingly buying, moving into this big news, which I'm going to bring to you today. Insiders, well, I can tell you that. Looking at that, insiders are doing taxable automatic trades. No big movement there with insiders. So we're not concerned about anything there at all. The economic moat is wide. That's great. Now, economic moat is the profitability of the company, which means they can crush the competition. The wider your margin, the lower you can reduce your prices, and still you can crush the competition and outperform anybody. So having a wide moat is very good. Fair value, well, we'll make our judgment of what the fair value is later. Stewardship exemplary, of course. Earnings always beating expectations. Q3 was a great beat. Are we going to beat again? So obviously it's a very cash positive business, very solid business, steady growth. Well, I'd say more than steady at the moment. Anyway, who else is buying the stock? This is important. We already know how the stock trades. However, this backs it up. You can see, before I even open this, what we're going to see now is we're going to see solid companies. We're not going to see Binky Bonk, and we're not going to see Lucid. We're not going to see Mullen. This is owned by real investors, and that means there's no volatility here. There's solid performance. If we look at the companies that others are buying, it's all solid blue chip, old money stocks, and that's good. That's what you want, folks. You want to be a boring investor. Boring investors always make money. Look at it. There we go. It speaks for itself. It speaks for itself. So we can buy this with confidence, right? Or at least could suggest so. We all know BlackRock's great, but we haven't confirmed it with our own analysis yet. So let's continue with our analysis, and we can do that, right? So please tap the like button if you do like this stream, and consider subscribing as well. Would be absolutely wonderful. Okay, let's move on and look at something else. Now, what we're going to do is take a look, first of all, using our Seeking Alpha. If you want this, I've just given you the link in the chat. It's also below in the description, pinned to the comments. We've got free trials and giveaways and all sorts. Otherwise, you can't see this information. We have a hold, a buy, and a hold. So that's nice to see. Factor grade growth is B+, valuation D-. Now, it would suggest it's expensive. We'll look at that in detail shortly. Profitability A, no surprise there. Momentum B-, and revisions A. So things are looking good there. What about these numbers here? Now, this is important. We just showed you a few moments ago that the price earnings ratio was 25 times. Remember I showed you that? 25 times. This is the backward looking number. If I just show it, move down there, look, 25 times earnings. That's the measure a lot of people use. However, they miss the main point. What you should be looking at with a growth stock and a solid company like this is where it's going. The forward PE is 23 times earnings. Now, how does that compare to the S&P? The S&P is currently 26 times earning, 26 times forward. So I would imagine it's very, very similar to the S&P from a price performance ratio. Short interest, there's none. 1.38. You're going to get no short squeezes on BlackRock ever. So don't even think of that. That isn't going to happen. As predicted, XRP is crashing. As predicted, I'm making this during a live show. XRP is crashing exactly like we said. Wow. I just want to bring this during the making of this video. Exactly on time to the moment. Sensei was spot on. Again, there is our XRP crashing right now. We tried to warn people. Those that were gamblers gave us a lot of a hard time for it and wouldn't listen to us. And there it goes. It's already down nearly 16%. In fact, yes, it is. Okay, moving on with our review. No surprise. We've got so there's no short squeeze here. Let's now move on to some very important news that has just occurred. BlackRock to acquire credit investment manager HPS Investment. Very, very good indeed. There it is. This is good news. This is just out just a few moments ago. You would not have this news unless you pay a lot of money for it. I brought it to you as I do with these analysis videos. BlackRock agreed to acquire credit investment manager HPS Investment Partners for $12 billion in BlackRock equity, a move that will expand BlackRock's private credit franchise to $220 billion in client assets, the company said on Tuesday. The deal will continue HPS's diversified origination and capital flexibility with BlackRock's corporate and asset over relationships. The combined private credit franchise will work with BlackRock's $3 trillion public fixed income business to provide both public and private income solutions for clients across their portfolios, BlackRock said. By acquiring HPS, BlackRock is building up its business in a fast-growing market. The private credit market is expected to more than double to $4.5 trillion by 2030, BlackRock said. This is very, very good for all of those of you who are investing in BlackRock. Some good news here. We're going to talk about the performance now of BlackRock compared to the S&P 500. If we go back to 2015, so we've got 11 years here, $10,000 in BlackRock would now return you, in the S&P would have returned you 34,000, more than a 3x. In BlackRock, 36,000. BlackRock is in green and the S&P is in blue. So it's slightly outperformed, but you can see how it's a lot more volatile, presents you opportunity to trade it rather than just own it along the journey. Okay, that's the difference between S&P and BlackRock. If you hold them long term, you probably end up around about the same anyway. But if you trade this, it provides a great opportunity. Let's look at what's important, why people buy this stock and they hold it, is for the dividends. What we're looking at is it pays out every single quarter and it increases its payouts consistently, makes it a dividend king. 150, 150, 168, 168, 168, 193, 193, 218, 218, 218, 229, 229, 229, 250, 250, 250, 288, 313, 313, 330, 330, 363, 363, 413, 413, 488, 48, 500, 500, 500, 510, 510, 510. There's my little auction voice there. So you can see ever increasing, always paying out a solid business. We like that. Doesn't qualify, of course, for dividend king. It hasn't been going down long enough, but nevertheless, it performs like one over time. We shall see. Now, our final analysis before we wrap up and to decide if this is a great asset for you to own. Well, certainly it is to own, but is it a good time to buy? $1,000 is the price and 33 cents. Please tap the like if you do like this and consider subscribing as well. That would be very, very nice. Okay, let's look at this. The intrinsic valuation. The intrinsic valuation is 17% overvalued. Now, it's a growth stock. You can overpay a growth stock by 25%. So it's in the realms of being a stock I would buy. That's my benchmark, and we're okay with that. Best case scenario, we've now got some good news. We're moving into a best case scenario situation because we've got interest rates coming down. Good news for BlackRock. The markets are still bullish for another year. So we are in that territory. So, okay. Worst case scenario, we're not in a worst case scenario. That makes no sense. So we're focusing on the base case. If we move down here to the financials, look here, and we can see that revenue is up 4%. Operating income is up 6%. We do have a rather steep incline, not an S-curve. This isn't going to give you an S-curve now, is it? But that's a steady growth. We like that, but it's pretty steep. So that's very, very good. Net income is up 0.4%. Financing cash flow is 2.3 billion. Investing cash flow, it's negative 62%. That's a plus. Operating cash flow is down 4%. Expecting that to rise on the next report. 132 billion in assets of 14 billion. Now, you all know that we don't want a business with just a load of cash. A load of cash serves no purpose. Like the DJT stock, it serves no purpose just having a big pile of cash. You're just paying for someone's cash. Well, that's pointless. You can make the same percentage on your own cash. We like this. It has a decent amount of cash. Well-run businesses have a medium-sized pool of cash. No, they don't have 80, 90 or 100% like DJT stock. Serves no purpose and people just think it's great, and it's not. It presents a false narrative. 132 billion with 14 billion in cash is great. Let's look at the debt position though first. 91 billion, long-term debt 12 billion. That's it. No short-term, long-term debt of 12 billion. Many companies keep debt because there's lots of tax advantages and they make more money from the debt, right? Rates coming down, that's a catalyst for them. They have 12.4 billion and 14 billion in cash. So they can pay off their debts tomorrow if they want to, so their balance sheet is okay. Okay, the balance sheet is okay. We don't like that amount of debt, but most businesses of this size and these amount of assets hold debt. There's all sorts of advantages to that. Gross margin is 81%, operating margin 37%. This is what we talked about earlier. In the sector, the margin is high. That's why their moat is wide. That's what it's referring to. FCF margin 21%. Now, if you're not familiar with these terms, you can open these up. If you use my software, I'll give you the link again. This is Alpha Spread. It's very cost effective. It's for those of you that can't afford seeking alpha. This is a much cheaper software. All my members get the best deal. I know the CEO personally, so you all get a great deal. And I think it's very, very simple, very well laid out. It's a great software. I use it all the time. I would strongly recommend it. And the discount that you get is so good, it makes my membership basically free. Very, very good indeed. Do go and check that out. So the ROCE 6%, ROIC 5%, ROA 5%, ROE 15%. Profitability 63%. Their margins are good. They're not tech stocks though, right? It's not the same as Nvidia, but it's a very good profit. 59%, not bright green like an Apple or an Nvidia. It's not printing money, but it's a very solid business. It's because it holds that debt. However, rates going down now will be a catalyst for this solvency score to improve. They'll probably reduce their debt position. I wouldn't be surprised. Let me just check something as I'm making this live. Yes, we are in subscribers only mode. Just wanted to check that. So scrolling on down, Wall Street, worst case scenario, 10% downside. I can afford that. 9% upside, great. 28%, great. Slightly outperforming the S&P. So very small, insignificant inside trades. So I'll give you my final thoughts on this. Is this a buy, hold, or sell? Well, it's a great asset. No question about it. Very, very well managed. Great margins for what it does. Good balance sheet for what it does. It's not a tech stock. You can own this and perhaps outperform the S&P 500. Its dividend payouts is exemplary. It's solid. It's not going anywhere. but it also presents opportunity to trade. Sometimes it dips below the S&P, sometimes it rides above the S&P, but ultimately it outperforms it slightly. But it does give the opportunity to buy the dips, trade it. However, what I would be doing, and this would be my thoughts on this stock. Remember, I only own the S&P for impartiality anyway, so I won't be buying it. Is we've got some great news right now. Not a bad time to buy. If I was interested in Blackrock and wanted to own this, I would own it alongside the S&P. Remember, it's in the S&P anyway, so you own it anyway. But if you wanted to own it separately, I would own this on my IRA. That way I could trade it for free, tax-free, not on my brokerage account. And what I'd be looking to do is every time it outperformed the S&P, I would trim half my position, take some money out, hold it in cash. When it drops down below the S&P, which it does consistently up and down, either side of it, I would buy it back and do that over and over again. I wouldn't have my dividends as auto pay. I don't want them to come in on a day when it's riding high. I would have my dividends coming in to cash so I can buy on the dip manually. That's what disciplined investors do. If you just want to sit on the beach and be lazy, let it auto invest, but that's never the best way of doing it. It's the best way of doing it if you're lazy and you don't pay attention, but if you're not, it's best to turn it off. That's what I would do. This is most certainly a stock you can own forever. It's a great asset. You could just go with the S&P and be done with it. However, if you'd like to trade it, it does present some opportunity. Is now the best time to buy it? Well, at the moment, it's bouncing around over the week. The news has just come out. I would say this is a good time, potentially. What I would suggest, as it just on a bit of a dip, look, always trades up though, bit of a dip, what I would do is, if I had $1,000, I'd probably put 80% in now and wait for a small dip, hold the other 20% allocation to one side. Then you have a little bit extra to buy at a slightly lower price. If it goes up without you, don't worry. The time will come when it'll dip again. Don't matter if you pay more in the future. Averages going up is not a problem. That's what real investors do. They don't care about the average thing. That's just a YouTube thing. And you'll do very well indeed. So there you go. Blackrock is a great investment. That's my thoughts, how to trade it. That's my thoughts, how to get into it. Click above my head for all the links down below in the description. Over here, I shall put the Blackrock playlist. I will create one for it. So if anyone wants me to do earnings reports, latest news, I'll put it in there. And down here, I should put the full Alpha Spread playlist, which will show you over 200 stocks I've reviewed. And we run those on the extra channel so you can go back and hear all the reviews that I've done and see how they perform. Until next time, as always, take care of yourselves and each other.